So BlackRock is now offering an ETF for Bitcoin. There's rumors that Fidelity is hopping on board as well. And the questions that we want to ask, that's what we want to dive into on this show. All the different questions that we need to be asking ourselves. What's happening to Bitcoin? Is it going to be around? I think that answer is kind of a there. That Bitcoin's not going anywhere. When and how do we get in? When should we be adding? How much should we be adding? If this is something that you want to get involved with, when should we look to trim positions? Because we saw Bitcoin run up to 60,000 plus. How do we make sure that we lock in at least some of that without giving it all back? Like right now, it's trading at 26, a little bit better than 26 and a half. I've got it over on the screen here. It's trading at 26,820. So, how do you make sure that you lock in some of those gains? What about some of these other altcoins that you hear about? I was looking at Twitter just before hopping on here, and now there's a PSYOP coin. I think that maybe that's related to Tate. Not quite sure, but there's all different kinds of these other coins that are coming out. So, what about those? We'll talk about all this. I think that those are some of the good foundational questions to begin to ask yourself. But for now, welcome to today's show, Morning Coffee with Mike. Got the monkey. Maybe that's appropriate, right? The meme, the NFTs. Maybe we'll talk about that too. If you haven't already, like the show, like, subscribe, drop comments. That helps it blast out to a lot more people. I'm taking questions from all over the place. So if you're watching this on Twitter, type in your questions. If you are watching this on Instagram, you guys are here. I love you guys. And you guys over there on YouTube, on LinkedIn, on Facebook, love you guys. Type your questions in and let me know that you're there and that you're live and that you're paying attention. All right. So, Fidelity offering Bitcoin or rumored to be offering Bitcoin. I believe that they already allow you to have it as part of your 401k. Read that. Here's what I think. Let me know what you guys think as well, because we're all tackling this together. I'm just a person that's been trading for a while, and so my mind works in this way where I'm trying to think about, well, how can I add this at a low risk, in a low risk rate, gain exposure, and allow myself to participate in the upside. So Bitcoin is not going away anytime soon. If Bitcoin were going away, then I don't think that we would see BlackRock creating an ETF for it. I don't think that we would hear about Fidelity following suit. I also think that there will be arguments on both sides, right? If we are interested in Bitcoin, we'll be able to do a quick Google search or maybe go on ChatGPT or wherever and find countless reasons why you should be involved in Bitcoin. I think that if you're skeptical, you could find countless reasons why you shouldn't be involved. So, how do we navigate the endless sea of information, right? That I think that that's one of the big things that we need to think about. How do we navigate this endless sea of information? Well, if there's arguments on both sides, then I think that the way to look at it is to see what's actually happening. How can we see what's actually happening? And the way that we're going to see what's actually happening isn't just like going and searching the news and seeing what we're going to find there. What I think is we see what's happening based on the price action itself, based on the price, based on the volume. You could go look at where Bitcoin is right now, right? So pull up a chart and show that to you guys. So I'm just looking around here, bring this up over on the Twitter and the YouTube and all those places. Let's get that going. right? So here it is. Here's a daily chart of Bitcoin. I think I want to swap Bitcoin and take a look at Bitcoin in the monthly time frame. That's where I like to get involved in Bitcoin on the monthly, longer term time frames here. So you could see this. We zoom back out how Bitcoin, of course, a massive, massive run. People back here, right? So let's take a look all the way back here, right? So this is going back to 2014. People are very skeptical about Bitcoin here. It's dropping, and as price drops for any kind of security, whether it's whether you're talking about crypto, whether you're talking about a stock, whether you're talking about anything really, well, when you see price falling, there's going to be no shortage of negative news out there. You'll find some people that are permanently bullish that'll be writing positive things about it, but then you get this massive run here all the way up to uh, almost 20,000. 19,891 was the high in December 2017. Then more rumors along the way, drops all the way down to uh, 3,500 roughly. And then you get this epic climb all the way back to about 65,000 or 68,000 in November of 21. There's no shortage of news throughout any of this. To me, the one thing that's clear is that Bitcoin is not going to be going anywhere. And the reason why is because there's so much infrastructure that's being built around it. That's number one. Number two, you wouldn't have the major institutions, right? You got BlackRock, you have Fidelity. I'm sure that there'll be plenty of others hopping on board too. You wouldn't see them jumping out and or you wouldn't see them making these ETFs and getting more and more involved in the space if they were concerned that this was going away in the next year, 2 years, 5 years. So great. If you're on board with that, then one of the questions to ask ourselves is how do we profit from it, right? This is a trading show, so I'm sure that all of you here are interested in answering that question. How do you profit from it? See a question coming in from Colin over on YouTube. Can you swing trade crypto similar to stocks? Do you look for the same things that you do when evaluating a stock setup? Very good question. And that's actually, well, one of the things that I want to address with the when and how to get in. How would you trade this thing? There are a number of ways that I think that you can trade crypto. One of the things that I personally find challenging about trading crypto and trading crypto in the way that I trade stocks. Well, the way that I trade stocks is I like to set buy stop limit orders and look at price action and to trade chart patterns. Now, the same kinds of chart patterns, your flags, your cup with handles, double bottoms, all that stuff, all of that is based on supply and demand. So you'll see that really in any market that you could think of, stocks, crypto, whatever. How crypto moves is a bit different than how stocks move. For example, if you're trading crypto on, say, Coinbase versus one of these other platforms, name a platform, and you'll find that the quote is a little bit different depending on where you go. So if you are going to have something like a hard stop line in the sand, it might get filled on one platform, but if you're looking at the wrong price quote, it might continue going and you're out because of different quotes in different places. So how do you trade around that, right? Like, so to me, that's one one hurdle in trading it with swing trading. One of the ways that I think that you could get around that in swing trading is by paying attention to the quotes from the broker that you're using. If you're doing it that way, there's still the challenge of holding this thing overnight because crypto is a 24/7 market. So if you have your stops in and let's say crypto spikes down and then flies back up, then you won't be able to take advantage of the move, at least not as clearly. Maybe you have an algorithm, maybe you have bots. Those things can be explored as well. Great questions that we can all figure out and ask for ourselves. And again, this is I have just as many questions as everybody else. We could all work together to answer some of these questions, flesh out some of these ideas. And I think that it's a good thing to ask a lot of questions too, right? Like, don't believe uh, anything just because somebody says it or just because something sounds good. Ask a lot of questions. So, what's been my solution to crypto? The solution that I have so far is to be buying crypto incrementally and to be building up an account, right? So more of a longer term approach. That's what I'm doing right now. It's interesting because that's actually a bit different than what I was doing a couple of years ago when crypto was on this tear, right? So let's go back to the charts, show you what I mean. So back here, let's go to the weekly. During this run, I was long Bitcoin, I was long Ethereum, I was long Doge for a good chunk of Doge's run. In fact, Doge was my biggest gain ever. I had gotten in somewhere around 4 cents, somewhere around right here, and rode it this entire move up. And I ended up selling somewhere in here for about an 800% gain in the span of a few months. Now, how do I reconcile that with what I had just said? So, here's part of the thought process for how I would handle it. When we're in a stage two uptrend, let me know if you guys are familiar with what a stage two uptrend is. I'll talk through it briefly. So, stage two uptrend is a concept that Stan Weinstein came up with. Stan Weinstein wrote a book called Secrets to Profiting in Bull and Bear Markets. I believe this book came out in the 80s. It's a fantastic book. Highly recommend that you read this. So, stage two uptrend means that you're all of the weekly time frames, the daily time frames are making series of higher highs, higher lows. There's a series of moving averages that are also pointed north. Uh, believe that it's the 200, 150 that you want to see pointing north. Great. Why do you want to buy in a stage two uptrend? The reason why you want to buy in a stage two uptrend is because that is the bulk of the gains are made to the upside. There's a difference if price is pulling back and you've just been chopping around for months and months and months versus if you've been in an uptrend and then price pulls back and consolidates for a few weeks. That's the time to be buying the dip. And that's where a large chunk of your gains can be made. That's why it works so well in the crypto space back in 21, right? Get this chart back up here. That's why it worked so well in Doge, in Ethereum Classic, in Litecoin, for all these back here. That's why it works so well. That's why it worked so well in Bitcoin back then. But the market changed, right? You went into a stage three top, right? Sticking with Stan Weinstein terms. Then you went into a stage four decline, right? Where you keep on making a series of lower lows. And now you are transitioning. Potentially, you're in stage one. This might be considered stage two. If it's not it's close to transitioning. You really want to have both the 10-week line and the 40-week line both turned up. But this is still good. This is actually looks like it could be shaping up to be a double bottom if price starts to break back above, what's that high there? 28,475. I think that would create for an interesting move because then you would have the 40-week line turned up. The 10-week line would likely begin to curve back higher. And yeah, that would create an interesting move. And then that would be more of the environment for swing trading. But for this right here, it wouldn't quite fit my style. However, longer term, right? Thinking in terms of longer term and what I'm doing. This is how I'm handling it. So I am beginning to buy Bitcoin regularly at the end of each month. That way I could follow along with the monthly charts here. Buy Bitcoin at the end of each month. And what I found was that if you started out with this strategy at the absolute peak and bought Bitcoin, the same amount of Bitcoin every single month at the end of the month, right now, you would be up. Crazy to think, right? Yeah, you wouldn't think that you would be up after buying it here, 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 right? Like, so right there, the close was 56,966. You're buying it all the way down, and now price is still at 20, now it's at 26,906. How could you possibly be up? Because this is where uh, when you buy and you buy on the way down and you do dollar cost averaging, this is how a longer term thesis can actually play out. But it works as a longer term thesis. It doesn't just mean buy indiscriminately. This is where position sizing comes into play. Position sizing is such a key skill. It's such a key skill. It's an important thing for you to learn how to do and do effectively. I'm not going in on Bitcoin with this longer term strategy with my whole account. I'm buying little tiny increments. I'm allowing the compounding to be able to occur over months, over years. And when Bitcoin finally does start to rally, right? So let's say that Bitcoin rallies between here and it gets back up to its prior highs. When do we trim? We've already answered a couple of questions, right? Or we ventured answers at a couple of questions, the when and the how to get in. Oh, the how. So the way that I would like to get in, rather than using one of these ETFs, these proxy ETFs from Blackrock or from Fidelity or one of these, if you're doing a 401k or a 403b or one of these retirement accounts, then sure, that's an excellent way to participate inside your retirement account. Otherwise, I still think that using something like Coinbase is fantastic to be able to start to build a position little by little and then adding it at the end of the month. That's what I like to do. Um, so when to trim? When to trim? How do we lock in some of those profits? Because you don't want to be the person that rides it all the way up and then rides it all the way back down, right? Well, just like just like when you are planting an apple tree, there's a time to plant, there's a time to harvest. You don't want to just let the apples sit there and rot, right? You're going to want to harvest some of them. So when do you harvest your Bitcoin? The time to harvest some of the Bitcoin would be when it gets too far extended. Too far extended. How do you know when it's too far extended? This is where having a multi time frame analysis can start to come into play. Which time frames do you analyze? For me, I'm looking at this from a long-term perspective. So I would be analyzing monthly charts. I will be analyzing weekly charts. I'll be analyzing daily charts too. And if price starts to get too far ahead of itself, where I have several hundred percent gains on this, and I'm identifying that it's entering additional parabolic moves. Getting a little bit into the weeds here, a little bit more than I can explain all the details of all these things, but these are all things that I talk about in the book, in my newsletter, that I blog posts. So you could go and get all this kinds of information for free or dig deeper into books and everything else. Parabolic move, you want to sell into those. At least trim. At least trim. So that way you have your base, you're lowering your average cost basis, and then you could take that money, not just maybe you go out and you get something for yourself, right? That's reinvest those assets. Let's say you buy a property. Let's say that you go on a trip, something nice like that, right? Let's say that you're doing those things, but also keep some of that money so that way you could reinvest it back into Bitcoin because you're dealing with a longer term thesis. Few ideas there. What about other coins? What about all these altcoins that you hear about? Here are my thoughts on these other coins. Just like how you have a lot of penny stocks that are out there, and a lot of these penny stocks are crap, they're not worth your time. That's my feeling on the vast majority of the altcoins. Sure, you could get a situation where there's a pump and it goes up very quickly, but for the most part, the people that are involved pre-ICO, those are the people that are making the money, and then we have a handful of people that are able to take advantage of those quick pops, and then that's it. For the most part, you don't see them in these long-term uptrends, and you certainly don't see the Blackrocks and the Fidelities of the world getting involved in all these altcoins. The major coins, you have Bitcoin, you have Litecoin, you have Ethereum, Ethereum Classic. I would even Doja is funny. I don't think anybody would even know about Doge if it weren't for Elon Musk talking about Doge, but it's entered the space, so people know about it, and it has the ability, by being well known, to make runs sometimes. Still think the best ones, and then now we're getting into, well, what's Mike's opinion? Mike's opinion, I actually have my money in Bitcoin, building position there. Looking at Ethereum, Ethereum Classic, yeah, Litecoin too. I see those as kind of like in a similar way that I look at the major indexes of the stock market. Those ones tend to move together. Those are the ones that I'm interested in for that reason. And also because they are the largest ones, most liquid, most stable as something that fluctuates. Well, let's see. Well, what's the percent daily range on Bitcoin? Actually, well, the percent daily range on Bitcoin is getting down into like the 3-4% range. Ethereum Classic, similar. Yeah. All right. Let's take some questions. We are 25 minutes in. That was a solid rant. Let's see what questions came in. Colin, we already answered your question on swing trading. Let me know what other questions you guys have. I'm just scrolling back through here on Instagram. Yeah, and over there on Twitter, I see some people watching on Twitter. If you guys have questions on Twitter, just type it right below the stream. Thoughts, questions on Bitcoin? All right, Gonzalez. I enjoy the blockchain technology, but I still don't know how I feel about the biggest Bitcoin wallet being the Chinese government. Yeah, that's interesting too. If we don't if there's something like that that we're not sure about, but we're kind of on the fence. Maybe there's something going on with another government. Maybe this could influence price and things collapse. Maybe price goes to the moon. Not quite sure what is going to happen. Well, what should I do? The old saying is that with in order to have reward, you need risk, or that they're intertwined, just like a yin and yang. You have risk side of the equation, you have the reward side of the equation. You can't have one without the other. So, if we want to expose ourselves to the potential upside, what are we willing to risk? That's the question. What are we willing to risk to get to that upside? And from there, you could start to figure out, well, what percentage of my capital do I want to allocate to Bitcoin? And this is where part of that longer term thesis comes into play, because it, we could take a small amount of our capital and put it in. And if we're entering the marketplace with the understanding that we might lose this, right? And if you're going into it thinking that, you know what, I might lose this capital, all of it, right? So let's say that you've got, I don't know, 10 grand that you're thinking about putting into Bitcoin. And like, I might lose this 10 grand. If you're comfortable with potentially losing it all, and you wouldn't lose it all clean overnight, but that's also a card on the deck. Maybe we need to think through and be prepared for all potential outcomes. So, are you comfortable losing the full amount? Yes or no? Okay. What amount would you be comfortable losing the full amount? And what is the probability of that card coming out of the deck? If we're talking about cards, there's 52 cards, right? In the world of possibilities of what could happen with Bitcoin, maybe there's 1,000 different possibilities, right? So the Bitcoin going to zero tomorrow, maybe that's one in 1,000, right? They're probably far smaller than that. Let's say that it's one in 100,000 that happens. Are you still willing to take the risk? And how much are you willing to risk? If there is a one in 100,000 chance that if I take said action that I'm going to die, then I'm taking precautions, right? I'm not just going all in. So start to think about it. That could be a way to think through the question, and to think about how much are you actually willing to put into the account. It's highly unlikely that it would blow up, and to blow up very quickly without a heads up. How much are you willing to put in? And then you could begin to build an account slower that way. Question from Colin: is Coinbase the best place to buy Bitcoin? I'm not sure if it's the best, right? Because I haven't researched every single broker that's out there. However, it is where I have my account, and I'm buying Bitcoin through Coinbase. And yeah, the fees are high, a little bit higher. But think of it like this, the transaction fees are about $3 per transaction. That's not that high, especially when you think about uh, how much transaction fees for stocks were uh, in the past 10 years, right? The notion of zero transaction fees is still relatively new for stocks and for all these different exchanges. I would rather have a more secure uh, broker, a more reliable broker, and pay a little bit more versus saving on the transaction fee. If I'm able to trade Bitcoin on Thinkorswim, Thinkorswim is my preferred platform where I'm doing the vast majority of my stock trades. If it goes there, then I'll start doing crypto trading over there. For now, I like Coinbase. Can you do gold analysis? Sure. The all this analysis applies. Uh, all the price action analysis applies to gold, to crypto, to anything that has supply and demand. We could take a quick peek at gold, and then we'll need to call it a day pretty soon. Let's put in gold. GLD. We'll take a look at GLD. Okay, so here's GLD. This is a daily chart of GLD, and you can see that it topped in 2020 and has basically gone nowhere for the past 3 years. And it's traded between about 190 and 150 for that time. Not much of a move. At one point, it looked like it was starting to gain some traction. It had a quick move back here in January. Then it pulled back. Then it started to run up again. And it's been consolidating. Maybe it starts to turn up again. I would be interested in it if we start to get some more VCP action. Everybody know what VCP action means? VCP, something that Mark Minervini has spoken about and coined the term. Been posting a lot about Mark Minervini lately from an interview that I had with him. Actually, it was the fireside chat that I had with him at the Trading Mind Wheel virtual conference. So Mark came up with this concept called the VCP, volatility contraction pattern. What it means is that when you're looking at price, that you see it contract and contract and contract, and it's kind of like wringing water out of a towel. And what you're doing with price is that you're wringing the sellers out of the price action. When there's no more sellers left, and you're able to then uh, buy, just a little bit of buying pressure will push the stock or the crypto or the gold or whatever higher quicker because there's no more selling pressure. VCP also gives you a great way to figure out reward and risk and where you're going to enter, where you're going to place your stop. Now, one of many great things about that pattern. Highly recommend learning that pattern. I highly recommend learning from Mark. Mark is on Twitter and he has a number of fantastic books. Go check all of them out. Yeti Shark says VCP contraction, measure the pullbacks, and watch the volume in the base. Best books. Yes, indeed. Yeah, volume is an important part of that too. Thank you for sharing that. Yes, volume is definitely important. Don't want to miss that. Any other last minute thoughts, comments, or questions here? Also curious to hear what topics you guys would like to be discussed. If there's somebody that you would like to have me interview on the show, please let me know who, and I will do my best to bring those people on. All right, last question from Sparta over here on Instagram. Could you explain multiple time frame analysis some more? Sure. So multiple time frame analysis, what we're basically doing with multiple time frame analysis is we want to see, now I'll pull up some charts here. We want to see where multiple time frames cross one another. So on my charts, I've got monthly time frames, weekly time frames, daily time frames, and a 30-minute time frame. Now, why do I want to look at all these different time frames? I want to look at all these different time frames because when you start to see action that is similar across timeframes or multiple timeframes lining up at the same spot, that's where the most explosive action tends to be. Principle works, well, whether you're trading long term, right? So with Bitcoin or whatever else, if you're trading long term, if you're swing trading, if you're day trading, you want to see multiple time frames line up at the same spot. And that's going to do a few things for you. One, it's going to create, if it's breaking through resistance, it's going to create uh, a lot more demand at that area. Why? You've got more eyeballs on it. If you have a support level where you're thinking of placing your stop loss, that's going to also create a much sturdier floor because you have not just whatever time frame you're looking at, you also have the higher time frames that are also lined up at that level, so it makes it far more likely to be defended. That's a brief the couple of thoughts on multi time frame analysis. I like to get at least 2 that are lining up, at least the daily, at least the weekly that are lining up well when I'm swing trading. I get the 30-minute as well when I'm swing trading. You can look for others, but you don't want to go overboard with multi-time frame analysis too. Just like well with indicators, you could end up well with 50 different indicators on your charts. Maybe you think that I've got a lot of indicators on my charts. Uh, I actually just have a handful of moving averages, a relative strength line, and a couple of other things, but that's really it. If you have 3 or 4 time frames that you're looking at, the use the time frame that you're going to be trading on, and then look at a couple of time frames that are above it. So if you're swing trading, I like 30-minute if you're trading stocks because that's the time frame that splits evenly into a day, right? Because what is it, a 7.5 hour trading day? So looking at 30-hour blocks, you get full bars that way. Then I look at daily charts, then I look at weekly charts, and I got the monthly there for perspective. The more time frames that I could get to line up in that way, the better. So anyhow, I hope that helps. Let me see. Well, one last thing from Yeti Shark. He says, I'm curious how you are looking for big winners right now. How do you separate laggards? I think that this is going to be a fantastic question, Yeti Shark, for Friday's episode, right? How are you looking for big winners right now? How do you separate laggards? We like to buy coming out of big bases, but shouldn't the leaders already be leading in higher flags? Uh, the last part of the answer is yes, they should be leading already. So on Friday we'll talk about sector rotation. We'll talk about how to find the big winners now, how to identify well which ones are laggards, the process that I like to use and why, and we'll also keep it open for Q&A. That's what this show really is. It's meant to be interactive. I love fielding your questions and helping you out as best as I can. If you want to work closer to me, I do this kind of stuff, this kind of Q&A and bouncing ideas off it inside our elite program. We have a few different options when it comes to the elite program. Go check them out. It's on marawealth.com. And I will see you guys here on Friday at 11:30 a.m. Eastern Standard Time. Take care. Much love. Peace out, everybody.